Hello, I'm Ilana Kretschmer. I'm a lecturer for Tax 3701 and I'll be taking you through question 5. Question 5 is your provisional tax question. Let's read the required part first. Calculate the first provisional tax payment of Leatherbag Pty Limited for the 2017 year of assessment and state the last date such payment must be made to SARS to avoid any penalties. Provide brief reasons for selecting or not selecting a particular basic amount. Okay, so from this, we know we need to calculate the first provisional tax payment. We also need to provide reasons for selecting or not selecting a basic amount. And the last thing, we need to state what is the date payment needs to be made. So when you do a provisional tax question, it's the best to use a timeline. So first we're going to draw our timeline based on the information given in the question, and then we're going to go to the answer. So if we read the information given, it says Leatherbag Pty Limited. Leatherbag is a manufacturing company of handmade leather bags. Leatherbag is a small business corporation as defined in the Income Tax Act. Leatherbag's year of assessment ends on 31 December 2017. The following information is available. Then you have your information in the table. You have your year of assessments, 2017, 2016, 2015 and 2014. It gives you your taxable income and a date of assessment. This is very important. So if we're going to draw our timeline based on this table. So first we're going to insert our year of assessments. So December 2014, December 2015, December 2016 and December 2017. Next, we need to establish when is the first provisional tax payment due. This is due on 30 June 2017. It's 6 months before your year of assessment. Sorry, let me just show this that you can see. So our first provisional tax payment is due on 30 June 2017, like I said, because it's 6 months before your year of assessment, which is December 2017. When you are selecting a basic amount, you need to know two rules. Your 14-day rule, this is where a date of assessment is within 14 days of the date you need to make the payment. If it's less than 14 days, you can't use it. The next one is your 18-month rule. If the year of assessment you are selecting as a basic amount is more than 18 months from the date of payment, then you need to increase the basic amount by 8% for each year. So let's go look at the information and apply it to our timetable. So we have the year of assessment, 2016. The date of assessment is 25th June 2017. So we're going to put it on our timeline. 25th of June 06, that's our 2016 year of assessment. This is less than 14 days and therefore we can't use the 2016 year of assessment as a basic amount. Next we have our 2015 year of assessment. It was done on 20 June. Again, this is only 10 days. So the 2015 year of assessment is also less than 14 days and we can't use it. Next, we have our 2014 year of assessment. The date of assessment is 30 June 2015. This is more than 14 days, so we can use it. So 2014 we're going to use, but already you can see this might be more than 18 months. So we're using the December 2014 year of assessment. So from December to December 2015, it's 12 months. From December 2015 to December 2016, we have another 12 months, which gives us 24 months. And from December 2016 to 30 June 2017, it's 6 months. So in total, 30 months. So yes, we'll need to increase this basic amount by 8%. we need to increase it by 8% for each year of assessment. So December 2014 to December 2015 is 1 year. From December 2015 to December 2016 is your second year. And from December 2016 to December 2017 is your third year. Remember, you're doing your first provisional tax payment for December 2017. So you need to increase your basic amount with 3 years. Okay, now we're going to look at our solution. So first, we're going to add our date of payment, which is 30 June 2017. We're going to use the 2014 year of assessment as a basic amount, which is 389,000. I'm going to read the note in a minute. It also is asking the requirement that we need to provide a reason for using or not using a basic amount. So for your 2016 and 2015 year of assessment, we're going to say it's less than 14 days, and that's why we're not using it. For the 2014 year of assessment, we're going to say it's more than 18 months, and therefore we're going to increase it by 8%. So if we go back to our notes, note 2, you'll see it says, included in the taxable income of 389,000 Rand for the 2014 year of assessment for Letterbag was a realized taxable capital gain of 23,400 Rand. So any realized taxable capital gain, we need to take off our basic amount. So before we do our adjustment of 8%, we're going to first deduct the capital gain that was included, the 23,400. This gives us a total of 365,600. This is we're going to use this amount and increase it by 8%. So here's our adjustment, times the 8% times 3 years. And this gives us an amount of 87744, which gives us a total basic amount of 453,344. This is now the amount you're going to calculate your tax on. But remember, in our question it says, Letterbag is a small business corporation. Therefore, you will use the small business corporation tax tables. These tax tables will be given to you in the exam, but you need to know how to apply it. So first, we're going to calculate our tax on the full amount. So we take our basic amount, less the 365 as per the tax tables, times 21% plus the 20,300, which gives us tax of 38852. But we're only calculating the tax for the first provisional tax payment, so we need to multiply it by 50%. So we're going to multiply it by 50%, and this gives us an amount of 19,426. And that's the end of the first part, part A. We're now going to look at part B. So in the required, it says, advise Letterbag Pty Limited whether or not it needs to make a third provisional payment for the 2017 year of assessment. Note, you do not need to show any calculations. So even though it says you do not need to show any calculations, you still need to know what your second provisional tax payment was based on to determine if you need to make a third provisional tax payment. So again, I'm going to use a timeline for this. So I'm going to say my second provisional tax payment needs to be made on 31 December 2017, and my third provisional tax payment will be made on 30 June 2018. So let's go to the information to see what will we use for our second provisional tax payment. So the 2017 year of assessment, we have note 1. The accountant has estimated the taxable income for Letterbag to be 1.56 million for the 2017 year of assessment on 31 December 2017. The actual taxable income for leather bags 2017 year of assessment was calculated as 1.52 million on 30 April 2018. So, for the second provisional tax payment, you would have used your estimate. So the estimate was 1.56 million. The actual was calculated on 30 April 2018 was our actual, and this is 1.52 million. So just from doing your timeline, you can already see that you don't need to make a third provisional tax payment because your actual is less than your estimate. So in your solution, you'll say your second provisional tax payment is based on the estimate of 1.56 million. Your actual taxable income for 2017 was 1.522 million. And you'll say your estimate is more than your actual, and therefore no third provisional tax payment needs to be made. That brings us to the end of your provisional tax question. I hope you do well in the exam, so good luck.